topics and opinions expressed in the following show are solely those of the hosts and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Welcome to the Ask Good Questions podcast, broadcasting live every Wednesday, 6 p.m. Eastern Time on W4CY Radio at W4CY.com. This week and every week, we will reach for a higher purpose in money and life, as well as a focus on health and wellness. Now, let's join your host, Bonita Bell Anderson, as together we start with Asking Good Questions.
Hello, this is your host, Bonita Bell Anderson. Thank you so much for joining us today on Ask Good Questions. I have a special guest today with me, John Johnson, and I am going to give you a little bit of information about him. Actually, I'm going to start with telling you the story of how I met John. So I want to welcome John to the studio, and I went through a horrific divorce it's been about 25 years ago, and actually moved my youngest daughter and me to St. George, Utah, where she was attending a brand new performing arts high school. And I was just in a total funk. And I went to like this marketing meeting, and I sat next to this guy named John Johnson, who happened to be a Northwestern Mutual agent. And I said, I need to restart my life, and I need to do this and that. So that's how I actually started. He was actually helping me restart my life. So welcome, John.
Thank you. Thank you.
John is actually here in St. George, Utah with me, but he's in his studio and I'm in my studio. So let me tell you a little bit about John. He actually had a career before the whole life insurance gig, and we're calling today, and this was John's, I thought this was pretty clever on John's part. If you have a life, you need life insurance. We are going to talk about the scintillating topic of having life insurance today. You're going to be so glad you paid attention to this episode. But let me tell you a little bit about John first. He transitioned from a 25-year career in ophthalmology, biomedical photography, medical education, NEI research. What's NEI research?
National Institute of Health, National Eye.
Okay, just in case anybody doesn't know. And clinical care. And he left that industry to go into financial services. And it was really, really, really challenging for him. I'm going to have him tell a little bit more about that. But he started off with a bang. He completed his first year as a special agent. He was awarded Agent of the Year. Did you get a big head, John, when all that happened?
No, I just, I put up with it.
Yeah. And he was Lives Leader for a new Northwestern Mutual district agency in St. George, Utah. And it really helped get him off the ground with that. Over the next 26 years, he built an insurance and investment practice as Southern Utah's senior financial advisor. And he helped clients with their personal financial goals, utilizing facts, sound financial planning principles, and strategies, if I could talk. He's a fiduciary, which means he always puts the client's interests first. And he built and maintained long-lasting, trusted relationships over all that time. John was a great mentor for me because when I met John was right when I was transitioning into figuring out, what do I do? And it was actually John that said, you should look at this as a career. You'd be good at it. So do you have anything that you want to add to that?
Well, it's recruiting good people is what we did. We started an agency in Southern Utah, and in St. George, and we wanted some good people. We didn't have very many good people, and I thought you were, with your background in education, you would be good at what you do.
Yeah.
So I could see in the crystal ball all these wonderful things happening to you over the next 30 years or so.
Right. Well, yeah, it seems crazy that it's been it's been a long time now, but John and I kind of lost track of each other. And recently we've reconnected when I became a snowbird and ended up in St. George again. And so that's been really fun to reconnect with John. And when I was thinking, because I do financial topics, obviously, along with health and wellness topics, I thought, who would I go to if I wanted to talk about life insurance? And I thought I couldn't think of anybody but John, because he's like the master and he knows. And actually, we've got some good stories that we're going to tell, both the good and the bad side of why you should have something. So we are hoping that this will spur you to do that and to look into it. If you have any questions, there's a way for you to get in touch with me after the show, and you can go to the podcast website and all that. So anyway, well, John, let's get into it.
Okay.
This idea of, why you need life insurance. What would you tell someone if they're going, I don't know if I need any of that stuff? Why should I?
It's a real hard sell, because it's not like something that you can put your hands on. It's a promise from a company that they'll pay something if you die.
Yeah.
And going through the process of figuring out how much life insurance you need is not a mystery. It's a matter of replacing a lot of things and taking care of a lot of expenses that you want to not leave other people that you care about. And that's one of the things that we have to think about is if you care about someone, you probably should have life insurance. And a rule of thumb has been for many, many years to have as much life insurance as approximately 10 times your income. But I think with inflation and with changes and with debt and everything, realistically, that's not even enough. So you think about having, if you have a mortgage and if you have monthly expenses that you want to take care of, you need to really max out as much as you can qualify for.
Right.
And the key is to qualify for as much as you really need, and then figure out how to put that in the form of a life insurance contract that's affordable.
Right. You pretty much, like my best example of someone, like young people, I remember back in the day, right, when we were young, and I am thinking of an assistant, a current assistant, somebody that's working for the registered investment advisory firm that I'm with.
Mm-hmm.
She recently lost her husband, 31-year-old guy. And, just all of a sudden he drops dead, and, it was like some medical issues that nobody knew he even had. So here she is. And thank goodness she worked for us, because she had been taken care of. But most 30-year-olds think, oh, I've got lots of time.
Oh, yeah. Right? Yeah. Or immortality will fool you.
Yeah, absolutely. Well, okay. So, I'm hoping that we can make this as interesting as possible. And even if it's like, oh, I don't want to hear this, I want you to listen, because this is super important. So, John, let's talk about the different types of insurance first, because those young people, they should get what?
Well, initially, most young people have a budget, and well, everyone should have a budget, but you have to budget accordingly. And so if you set aside so much in your budget for life insurance, you figure out what kind of insurance that would be. It probably would be term insurance. Term insurance is the absolute least expensive insurance. And term insurance is great because it does its job, whether you need it now or later. The price on term insurance generally either stays level for 20 or 30 years, or it goes up a little bit each year after a certain age. So it does get pretty pricey after a while. But, when you're young, and I say when you're young and you don't know some of these things, a lot of people will just say, well, I'm going to buy term and invest the difference. Instead of, no, not at all. Buy term and invest the difference. And people never invest the difference. They buy term and then they spend the difference.
Yeah.
And so it's important to explain, educate how best to buy insurance. It comes in a lot of flavors. Okay. It's like you can buy whole life insurance, you can buy term insurance, you can buy a hybrid policy that has a lot of term insurance in it, which reduces the cost of it. But it depends on what you want that insurance to do. If you want it to be in place when you die, tell me when you're going to die, and I'll tell you how much term insurance to buy.
Yeah, there you go.
Okay, so it's that simple. Now, if you don't know when you're going to die, then you might want to consider buying something that is flexible and will work in the event of many problems that people have is paying premium sometimes down the road. We've had people that lapse their policies and don't have insurance at the time that they need it.
Right.
So it's important to plan accordingly and give all the options of the types of insurance and price them according to what the person's budget is, what it can stand.
Right.
The other part of it is that, we wouldn't even be interested in life insurance if we didn't care about others, if we don't care about having, to pay off a lot of debt, pay off the mortgage, pay off a HELOC or credit cards and have monthly income. So some people think that if you have $1 million of life insurance, that's really about all you need, or 2 million. Okay. That can go really fast.
Yeah.
And some people would say, well, I can just live off the interest. Well, what kind of interest do you get today? Maybe 4 or 5%, maybe. So, maybe if you get 4 or 5% on a $1 million or $2 million policy, that might get you in a comfortable spot. But I think using some of the planning tools that you and I've used and that you currently use, I think that you can really narrow it down and pinpoint some of the better numbers that people are interested in versus estimates.
Right.
And then find the cost of that insurance contract that will do the job. But insurance is such it's a hideous thing to try and sell. I'm sorry, it's not fun. It's and the people that sell it is it's like insurance salesmen are like someplace maybe a little bit above the
right.
car salesman or the used car salesman or the lawyer or the attorney.
Well, you don't think twice about insuring, doing the homeowner's insurance or the car insurance.
Exactly.
But people a lot of times don't think about insuring their life.
No,
look at all the crazy things that happen on a rate, and like there's been all these plane disasters lately. Holy cow. Those people would never, in a million years think, I'm not going to see tomorrow.
Yeah. And so you can't put a dollar amount on your life. I mean, try to put a dollar amount on your life. And that's where you start thinking more about what you're worth.
Yeah. Yeah. Well, what I'm thinking is I think that stories are the best way to talk about life insurance. So you told me a story about your grandfather that I would love to have you tell.
Oh, okay. Well, there was.
Do you have the picture? Can you put the picture up?
No, I don't have it. I'd have to get up and go in the other room and get it. But I'm just saying that my grandfather was a businessman in the 20s, and in the early 20s, 1920s, and before that. So in 1929, he and his wife were going to a Mother's Day outing, and they had a car accident, and my grandmother was injured enough where she passed away within a day or so. But my grandfather was injured, and he lived another 5 months. And when he died, he had made arrangements for his 3 daughters who survived the accident to have enough money to go to college. He had an executor of the trust, and that person was responsible for taking care of all the bills, and the house was paid for. And it's just like such a nice transition to security because he had life insurance.
What were the ages of the girls?
11, 7, and 4.
Wow.
So they lived in the home where they were living. They never had to be farmed out to other relatives. They were taken care of, and everything worked out fine. And except
for losing their parents.
Except the memories,
Yeah.
Of course. But once I was in the business of life insurance, I was told by my mother, who was the 7-year-old at the time, about her dad and the businesses and the things that he was doing with real estate and insurance and things. And so it gave me some confidence to go out and sell something like life insurance because it was more meaningful.
Yeah. Well, you had some purpose.
Yeah.
You had a memory of that.
Yeah.
Do you feel like people were more likely to get life insurance back then than they are now?
Well, I think in a way they were, if they could afford it, period. I don't think, I don't know back then if people, if they had a choice between whole life insurance or term insurance. I think they did. Okay. But once you die, who's going to say we're going to pay this death benefit, and but it's term insurance, or we're going to pay this death benefit because it was whole life. It doesn't matter. It's life insurance. So regardless, it's something that is badly needed for all forms of emergency things, but it's also used for businessing in terms of a financial planning tool in business for buy-sell agreements.
Yeah. There's lots of examples of a business losing a key leader.
Yeah.
One of the owners of the business, and wow, what do you do then? Yeah.
That happened on my when I was in the business in terms of a person that had a concrete business, and he was I think he was killed in an accident, and fortunately he had a key man policy, so everything kept going. And knew one of his brothers came over and took over the business, and without that policy, though, it would have just gone down out.
Oh yeah.
Out the door.
Oh yeah, yeah. And
So
then another story. On the flip side, I met with a lady who was getting close to retirement, and she had a husband who had recently gotten rid of his term insurance. He hadn't paid attention to doing all these wonderful things that we know about doing, changing it to whole life and all that. He had gotten rid of his term insurance policy, and then he gets sick, and and then he's not insurable at all.
Yeah.
And then I think it was like 2008 was when his whatever retirement money he had went sideways. And so I'm meeting with this gal, and he's died. He's gone. And I'm sitting across the table from this gal, and she's going, now what?
Mm-hmm.
There's nothing that a financial advisor can do at that point. That you are way past being able to have any strategies on anything. She ended up going to live with a daughter, and I wish I could have stayed in touch with that family just to see if that worked out, because in a lot of cases you don't want to have to go live with a daughter, because hopefully it works out, but I don't know. I never found out.
Right.
But it's kind of like the good, the bad, and the ugly that is across the board. So it's, if I could beat on people that are younger I would to take care of this. My mother used to say, take care of your business. And what she meant was things like your insurance and making sure you're saving and making sure that you're preparing for the future and all of that. So let's talk about this thing called whole life insurance that way too many people misunderstand.
Okay.
So what would you say if I was coming to you saying, John, I've heard that whole life insurance is a terrible investment?
Well, you would be correct. It's not an investment.
Okay. All right.
It is a way to bank money in a policy after tax dollar money inside a contract where you can build cash value up if you wish for later use.
Mm-hmm.
And along with that, it buys up a death benefit. So it's not an investment, but it is a great way to save cash. And taking the other, I'll jump ahead just for a second, is that keep in mind that a death benefit is tax-free.
Yes.
Tax exempt for most
yeah.
common folk. It's tax-free. Okay. And that's a huge benefit.
Yeah.
Okay? Because you've paid the monies the taxes have been paid on the monies that went into that premium.
Mm-hmm.
So anytime you put money into a whole life policy, it becomes sort of shielded from any future taxes, except for how you take the money out. So if you take it out down to the basis, it's tax-free. Anything above would be taxed at ordinary income.
The basis being how much money you've put into it.
Correct.
Right.
So it's not a great investment. I agree. But
the thing that people need to, the thing that I was taught when I started with Northwestern Mutual years ago was most people will start with term, and then there's this thing called a term conversion, where you take pieces of term and convert it to whole life. Because basically, if you keep insurance your whole life, there's going to be you're going to have different uses for it at different times. You know what I want to talk about, especially because just in case there are people listening to this who are 50-ish, something like that, or above that. The biggest thing about being able to use some life insurance nowadays, more and more and more of these permanent insurance policies have what's called an accelerated rider, where if you had a long-term care event way down the road, maybe when you're 80, you could take some money out of that life insurance policy to help pay for that. And I have seen that a lot in the last several years, where that's become quite a
nice
thing to look at.
Nice option, nice benefit when you take from the face amount certain dollars for long-term care as an example.
Yeah. Yeah. Like my sister who died several years ago now, she was 14 years older than me. And I remember one day when I was sitting with her and caring for her, and we had a whole family thing going on to take care of her. And she looked at me and she just shook her head and she said, I never thought it would go like this.
Mm-hmm.
And she didn't have any life insurance. And so there was this big family thing along with some hospice nurses and stuff. But there was a bunch of people that were involved in helping take care of her. Fortunately, our family was able to do that, but not everybody has that or have people that are willing to help like that.
Right.
So I actually back in the day also sold. I've sold a few long-term care policies, which have become ridiculously expensive now.
Absolutely. And
so the life insurance is a good option, I guess
mm-hmm.
you could say,
mm-hmm.
to be able to take, something out of the death benefit and use it. That's why they call it an accelerated living rider, because you're taking the money out before you die.
Correct. Yeah. Now, the options and the changes in some of the whole life policies have been very advantageous to put in use or put in place for people that have maybe a history of Alzheimer's.
Yeah.
Or other diseases. So it's
to make it, I'm thinking to kind of drive home the idea of how this can be really useful. Can you think of in your Northwestern Mutual career some of the disasters that have happened, and do you have any stories around ways the company and the agents have been able to help people?
Well, I think the biggest issue or the biggest tragedy was 9/11, where our company actually set up shop there to take applications for policy distributions. I mean, they took it very, very seriously and put a team of people there to work with, because in the towers there were a lot of Northwestern Mutual policy owners, lots, and
I think I heard that in some cases there was no body that was ever found.
Right, and they paid claims. Yeah,
right, and they went on the strength of the agent's relationship with the family, and like if the wife said, yeah, he was at work,
right,
he was in the second tower and he was at work,
right,
yeah, crazy stuff like that, mm-hmm. that you just don't know. It's just that I remember because I was a brand new agent.
Yeah.
You couldn't have a better example of a company taking care of its clients.
Yeah.
And that horrific example. And another one, going back to your grandfather, I remember hearing about Northwestern Mutual having boxes of cash in their main office, their home office in Milwaukee. Mm-hmm. And during the Great Depression, people would actually go in there and get loans from their policy, from the mm-hmm. cash that was in those boxes. That's way back in the day, but
yeah.
Super interesting that people were able to turn to life insurance policies when they didn't have any place else to turn.
Right, and that's the advantage of a mutual company in that mutual companies typically pay dividends.
Yeah,
and there are a lot of good mutual companies out there. And a lot of them pay a pretty hefty dividend. Yeah. Even in today's dollars.
So, John, if you're going, okay, I'm convinced I'm going to get some, what do you do? How do you go about getting some life insurance?
You need a worksheet to find out how much you need. You need a budget to find out how much you can really set aside and feel comfortable about doing it, and not stop your premiums in 2 or 3 years. And you have to feel good about it. You have to, it's a good feeling to know that you're taking care of something that you care about, and taking care of it the best economical way that you can. We can always, excuse me, we can always buy policies that are overpriced and underperform.
Mm-hmm.
And my goal was always to sell something that the client wanted to purchase because he knew or she knew it was what it was supposed to do, what it was supposed to do for them. So
it's kind of like there's so many, the term that comes to mind is it's guaranteed protection. There's not very many guarantees in today's world, right?
Mm-hmm.
But this is a contract between you and an insurance company. And if anything, God forbid, happens, then your family's covered.
Yeah. And you have the power on that contract, because you can stop payment and cancel it.
Yeah.
And take the cash and run.
Right. Well, tell me more about, not many people probably even understand the difference between like a mutual company and a stock company. And you're referring to dividends. And so a mutual company is kind of like, if you think of these grocery stores that are owned by employees, it's kind of the same sort of thing, would you say?
Yeah, the policy owners in a mutual company own the company per se. They don't have a board of. It's not owned by stockholders. It's owned by the policy owners in the policies that they have.
Right.
So the mutuality has its benefits.
Yes.
And it's something that you don't buy on the stock market per se. It's although there have been some mutual companies that have gone stock and are now on the stock market. So,
well, what are your tips for getting a life insurance policy?
I would say find a good, honest agent.
Right.
Or financial representative.
And by the way, I've got several of those I can think of in my office. And John, you probably have some that you could think of too. But if anyone needed a recommendation, I think you and I could let people know. So find a good, reputable agent.
Depends.
How are you going to do that? How are you going to know? How are you going to look for a good, reputable agent?
Okay. Most life insurance salespeople are also licensed to sell securities. And one thing that you can always do is go online at FINRA.org and check the financial broker registry. Yeah. Find out if there have been some situations for this broker that he's not telling you or she's not telling you about. If you don't see their picture in the post office, that's a good sign.
That's a good sign.
And I would say word of mouth. Organizations that through a chamber office or a chamber of commerce office, certainly the state office of the National Association of Insurance Commissioners can help you locate a good, honest agent. It's sort of like trying to find a doctor or a lawyer,
Yeah, maybe.
you know. And if you can find somebody that you feel comfortable working with, you generally want to find somebody that's a few years younger than you.
Yeah. Yeah.
That's all. That's
exactly.
all. You know.
Well, usually it's kind of like, if you're going to get some life insurance, the sooner the better, because the biggest thing that we know is that your health doesn't necessarily stay the same or get better the older you get.
Oh.
Why is that important, John?
Because you can't get anything, you can't get any insurance. Okay. 4 years into selling insurance, I was, I had a health issue, and I was disqualified from getting any more life insurance. So, it makes a big difference. So
I have a daughter that experienced cancer when she was pregnant. This was back in 2012. It was a horrific year, but fortunately I had gotten Northwestern Mutual policies on those kids
good
before this. And so here she is. She was able to get past the cancer. It was a horrific year, but we got past it. And now, remember the thing we called term conversion? She's been converted.
Yeah.
So I'm like, thank goodness that even as a young agent, I knew to talk to my kids about that and get that going, because we had no idea that was coming down the pike.
Yeah. Guaranteed term conversion at the age of conversion. They give you 7 options, 7 years, 7 different ages, I think it is, where you can take a portion of insurance and convert it without any underwriting.
Right.
At least that's what Northwestern Mutual offered. There are other companies that offer similar programs, but no, that has been a lifesaver for a lot of people.
Yeah. There's other writers too that are not, like the biggest one is one that we talked about, like the accelerated living writer that is for long-term care. But there's another one that is common that's for disability. Do you want to talk about that a little bit?
Oh yeah, the waiver premium.
Like if you're losing your job or if you become disabled, tell us how does that work?
I'll tell you a story about that. I have a friend that one of my clients who became disabled, and he thought he would be able to go back to work, but while he was disabled, I applied for a disability waiver of his premium, and his premium was, he had term insurance. This is the neat thing about term insurance is you can put the waiver premium on the term insurance. So if you did become disabled, you could actually convert that term insurance policy and let the company buy it for you. And so this situation was, he had a $1 million term policy. He became disabled, and it was pretty definite that he was not going to be able to get undisabled. And so we converted it. And, at his age, I think the premium, if he had to pay for it, was right around $40,000 a year. Wow. So he has been accumulating his annual premium in that policy for probably close to 20 years now.
Oh, wow.
Yeah. So just do the math. Is that a benefit or what on a term policy? And he never paid another dime into his insurance policy.
Wow. That you can't even put a price on that.
No. So, yeah.
So, because he could turn around and use that for retirement income.
Yeah, you can pull it right out of the policy, and as an income stream during retirement. Wow. And still have the death benefit intact minus whatever he pulls out.
Yeah.
So it's a very flexible financial planning tool.
Right.
For planning for the best and hoping for the best and planning for the worst case scenario too.
Yeah. It's just when I'm just thinking of my mom again and saying, take care of your business. It's the most loving thing you can do for your family.
Mm-hmm.
And for me, I never dreamed I would be going into the financial services industry. And if it wasn't for John saying, you should look at this, you might be good at it, I would have, if I wouldn't have had that massive left turn in my life with getting divorced and then having to restart my life, one of the things I thought about was restarting and re-looking at my life insurance. And now I was a single mom and going forward, wanting to have protection for my 3 daughters.
Right.
And also let's say something about divorce. Okay.
Oh yeah.
I'm just thinking of when somebody gets divorced and you have like a guaranteed payment that the spouse is supposed to pay to you or something.
Mm-hmm.
Do you think it's important for you to have life insurance on the ex-spouse?
Oh, hey, if I were, I don't mean to sound sexist, but if I were female and getting a divorce, I'd make damn sure that my ex had life insurance and I was the beneficiary and I owned the policy.
Right.
Why is
that important, John? Why is it important that she would own the policy?
Well, she can add to it. She can reduce it. She can do anything with that policy that she wants to.
Because another thing what if he stopped paying the premium?
Well, then you see, that's where you have to have it in a contract of sort from the attorney. It has to be a court ordered policy.
So that premium would have to continue being paid so that it would stay in. Well, and also, so if the policy was in danger of lapsing, she as the owner would receive a notification saying, hey, your policy is going to lapse. You don't want that to happen.
I had a situation where a lady was, her mail was diverted by a nasty ex-boyfriend, and the premium notices never got to her. And she was injured in a car accident and died. And the premium hadn't been paid.
Wow.
Because he had diverted her mail.
Wow.
Yeah.
So if you have a life, you need life insurance.
Yeah. Yeah, that's for sure.
What are some of the other one-liners, John?
If you don't have a life, forget it. Forget about it, Yeah. I mean, no, I think the big line that we use in a way for throwing guilt on a situation is that if you don't love your wife, I guess you don't need life insurance. Yeah, it's not good. Not good.
Yeah.
But that's not me. That's not me speaking. That's a smart mouth and you're just being
a smart aleck, but that's okay because it can be a very heavy subject. But we're just trying to bring to the surface today that this is important. Don't delay. Get it done. If you need some help in where you go to navigate this, you can contact me.
Yeah,
and I can confer with John if I need to.
Yeah. It's the relationship building that you need with your agent. It's just like the doctor. It's just like your minister. You've got to have that good relationship and trust. Right. If you don't have that, then keep shopping. Go someplace else.
Wouldn't you say that? I mean, having been in the industry for 25 years and the long career you've had too, I believe that when you have a good relationship with your clients, you become friends, you know them, they know you.
Mm-hmm.
It is something that it can be a special relationship, and it's somebody that the client knows that they can count on you.
That's right.
So that's important too. That is, if we could say, that's something that you want to look for.
That is key.
So, John, I can't believe that we've spent all this time talking about life insurance.
I can't either. It's so boring.
The time is almost up.
It's so boring.
It's get her done, right? Get her done.
Yeah. I
So
appreciate you.
what would be your final thoughts?
Be realistic, and nobody lives forever, and just be realistic and plan ahead. Plan ahead.
Yeah. All right. Well, with that, thank you so much for joining us today, John. And this is such a super important topic. And we hope that people will take it to heart and will act on this advice today. And thank you so much for joining us.
Thank you.
Continue. Make sure.
Yeah.
The name of this podcast is Ask Good Questions. I learned that from making a lot of mistakes in my life. So we'll end with, make sure you start with asking good questions in the area as well as anywhere else. All right.
Okay.
Bye-bye.
Bye now.
Today's episode is over, but we did ask good questions again, didn't we? Don't miss out as we broadcast live every Wednesday, 6 p.m. Eastern Time on W4CY Radio at W4CY.com. Join Bonita Bell Anderson next week for more conversations with experts on finances, retirement, behavioral finance issues, health and wellness, and more. Until then, remember to ask good questions.